Good morning. It is Friday, December 20th, 2024. I am Mark Sebastian, your only option. I'm joined by Licia J. Leslie, the Queen of the Candles, and this is Option Pit Live. Welcome, everybody. Well, Licia, PCE just hit, and here are the numbers. It came in cool. So it was a 0.1 increase month over month versus an expected 0.2. The core 0.1 versus an expected 0.2. The year over year, 2.4 versus an expected 2.5. And the core 2.8 versus an expected 2.9. Futures liked that reaction, to say the least. So heading into the number, S&P futures were trading about 58.80. They're now trading 59.06. That is well off the bottom. We hit a bottom around 7:25 Eastern time. That was all the way down at 58.65. So we're about $40 off the bottom. They're trying to kind of salvage the day. Even that said, we're still down. S&P futures are still down 0.5%. NASDAQ futures are getting the worst of it. They're down 0.9%. The Dow futures, they're down 0.25%. So that's your best performer. Licia, it's been an absolute mess over the last couple of days. Wednesday was just a nightmare for long people that own stocks, right? It was especially in the Mag 7.
Yeah.
And then Thursday, kind of your standard, looks like we're going to get a rebound, and then it kind of fails. And then, I think today we have quadruple witching, which is the expiration of index options, equity options, futures, and futures options all on the same day, 3 of the 4 this morning. It is the largest expiration in history.
That's incredible.
$1.4 trillion.
Amazing.
It's like it's like 3 months of national debt disappearing at once.
I have a quick thought.
Yeah.
Maybe I'm naive if anyone else may think this, or so the Feds on Wednesday, one of their key inflation numbers is 2 days later. Do they get a peek at that number before Wednesday? Or why don't they just wait till they see that number?
I don't know.
Doesn't it seem kind of goofy?
And the number came in light, which doesn't kind of explain the move in the dot plot. So the reason we had this major sell-off was not the Fed lowering the quarter point that everyone expected. It was that for 2025, they moved their rate expectations from lowering by a point to lowering by only 0.5 point. And the market really didn't like that.
I'm just saying, I'm not an economist, but ever since the great financial crisis of 2008, everyone expects lower interest rates. And it's like, it's not the real world. I mean,
No.
The real world needs interest rates. I don't, this fascination or like just witching of interest rates, right?
I mean,
they need to let the market just breathe and stop moving them.
You have a whole generation that didn't realize that a mortgage could be 6%.
Yeah, or 18.
Yeah. And, this is a normal mortgage rate. The issue we have is the housing inflated while rates were so low, and now interest rates are high, so it makes things really unaffordable for a lot of young people, which is a problem.
It is a problem. And housing hasn't come down, right?
No.
The housing prices aren't, maybe they're starting to stop going up, but yeah, they definitely say we have a housing crisis, but
I mean, I'm borrowing money on my house at 2.75%. Why would I ever sell it? There's your house shortage.
Exactly.
There's your shortage, folks. And so unless I was desperate, seriously, why would I ever sell it? So, but that was a shock, and I think it was exasperated by zero DTE. I think we got a glimpse of what a gamma bomb could look like on Wednesday a little bit with how much movement we had. Um, the only thing that I think was kind of stopping it was that it wasn't an overnight move. Like since it was interday, people had time to react. If that move
Yeah.
had been pre-market, we would have had I think the moves could have been worse. Yeah, and what was also really, I think, fascinating was the pain was not in a lot of the boring stocks or a lot of the underperformers. The pain was in the outperformers on Friday or on Wednesday.
Wednesday.
Like,
Yes.
take a look at what happened to Tesla. Licia, SMH has been.
Well, Tesla. I mean, Tesla's up $200 since the election.
I know.
Right here.
Well,
$200. I mean, it needed a pullback. Come on.
Well, the big joke is that Elon put 200 million into Trump's campaign and came out 200 billion richer.
Sounds about right.
That's a good return.
Yeah.
It's a good return on investment,
I'd say.
So yeah, but like Tesla got absolutely trounced. Goldman, we'd kind of been astounded by how strong Goldman was coming out of that election, and it got absolutely just taken out to the woodshed on Wednesday.
Yeah.
and thank you. And not just them, Nvidia, a lot of these, well, Nvidia not as bad. Microsoft had a massive swing. Meta had a massive swing. So a lot of the major selling, yeah, there you go, Meta. A lot of the major selling was not out of the boring, your Procter and Gamble's or GE or the stuff that
Right.
It was your triple Q stocks. It was your those had already kind of taken out of the chin a little bit. It was your triple Q stocks.
GE had a nice recovery yesterday.
It really did.
I have Qs sitting on support here. Yesterday's close.
They're in kind of an important spot.
They're down quite a bit this morning, though. They're way down. I have support just below here, 508.35. We may test that before we bounce.
Well, yeah. Well, you got a nice little. They got a little recovery off that PCE number because they were significantly lower prior to that number hitting. I mean, the low for the day on the Nasdaq futures was all the way down below 21,000, which is pretty nuts.
Yeah.
So the Mag 7s and the financials, all the ones that are really driven us higher, were the big losers. The winner, volatility.
Oh yeah.
Owning VIX, owning protection. Now you can't own it forever, but long exposure to the VIX is paying you.
Finally, huh?
It is. And again, I don't know how long it lasts. Typically these events don't last that long, but it would be kind of a fool's errand to sit there and think that VIX is definitely going right back down. It may take a minute. Normally
usually it does, right?
What's that?
Usually it does.
Yeah, normally on
a few days to...
Yeah, normally on a spike, it on a spike like that, it will drop quickly, but I think we've got this combination of quadruple witching. We've got this PCE number that hit, and then I think the holiday timing is a little odd. Typically we do see a little bit of volatility ahead of the Christmas, Hanukkah season. We saw it last year. We saw it the year before. But every now and again, that move can run through the holidays. And the period right directly around Christmas can be ugly.
But yet all we hear about is at Santa Claus rally.
Yeah, I know. Well, and it happens, but every now and again, typically you get a little volatility into this quadruple witching because that's every December. And then we come out of it, and then they come in and crush volatility. Just so happens that this December happens to be the one where the Federal Reserve decided to pour cold water on an overheated market. What I think is kind of interesting is how, we got that big one-day move. I think it's interesting that, on a yesterday, pretty inside day, futures were up 40, and then we ended up down $5. We didn't really get a big VIX pullback. I was thinking with the holidays coming up, if we're not going to get like a major sell-off, there needs to be a little bit more of a VIX pull-off, and we're not seeing that. What was your take on the behavior of the markets yesterday, Licia?
Well, I had been waiting for it literally all day to test that Wednesday's low and then just flush lower. I thought for sure we were going lower. I know you and I talked later in the afternoon, and you're like, well, we haven't gone down yet. Like, yeah, maybe you're right. I was expecting it to go lower. The chart, says lower. It's ugly. So maybe, I don't know. We'll see.
I was expecting lower yesterday too. And then it's like 1 o'clock in the afternoon and we still are hanging out up 30. I'm like, I guess they're not going to do their normal dirty tricks. Because typically after a major sell-off, you get a bounce and then they come in and trash it. Right. We didn't really see that yesterday until the last, 20 minutes?
Yeah.
Half hour, something along those lines. But today we're getting a little bit of fall through. Where do you see markets moving today? So based on where we are, like I said, NASDAQ futures are down 0.8%. ES has really recovered. So ES is S&P futures, folks.
We are the top of that gap of the election day gap is what was holding us. That was our support there.
Yeah.
So the market, and I said this yesterday, the market may not be happy until we close that gap. Gap, and then we can continue trading higher.
So here's a question. Is that really a gap, or is that a gap? Because you see, we like gap lower and then we gap back up. So I was actually looking at that, because that's like a 4-day bunch of noise. And,
right here.
And I was actually wanted to ask you about that. Should we be looking at kind of that kind of period right before that 4-day chop?
So you're saying just ignore that and nothing happened?
No, well, not nothing happened. I'm saying should we be using as like our gap level the bottom of that little small red candle before the big red drop, like right there?
We could, yes. That would definitely be some support there for sure.
I was just kind of wondering.
58.12, yes. But so I think the market's going to want to close this gap.
And that would put us at 57. What is that? 57,
85.
Yeah, I mean that would line nicely with some of my stock charts that I like to follow. We're already blue through the 50. We're approaching the 100-day moving average. And then I think that would be around where the 150-day moving average lands.
It also does not hurt the chart at all. It's still a very bullish chart.
Yeah. So now that's not necessarily going to happen. The chart is still bullish, and that's an important point that Licia just said. We closed the gap. We're still bullish, and this is where kind of this period end is so important. this drop, it might be our best opportunity to go long on some names in a very long time.
Also, if we do get a really nice pullback like that and drop, that's where you get that big buy the dip, right? That's where everyone comes in, and then you get that giant V bounce, right? Where everyone would come in, and then it just gets rally, and then it's all over, and we just continue higher.
Yeah.
I could see that happening.
I could 100% see that happening. And yeah, you get that buy the dip, and that also comes with a massive volatility collapse. And I do think, normally what we'd be looking for is this little spike in vol ahead of quadruple witching. The market bottoms out. Then next week, immediately after morning expiration today, and then really next week, just an absolute destruction of volatility. With this kind of move, and what happens is they destroy volatility so bad that you can actually buy options for too cheap. They actually oversell them, and you end up owning options that kind of don't decay for about 3 days, and you get a free look at what the market's going to do. And we have not seen, I don't know if that's going to develop prior to the holiday with the action sometimes. And I'm thinking back to 2018, you get that you actually kind of sell off all the way through the holidays. And then right before the end of the year, that's when things will turn around. So it might be the 31st. You get this giant collapse in volatility, and then you get this secondary opportunity to go zero decay. But I'm doing these 7 trades for zero decay options, and I was planning on doing them on Monday. I might have to wait, but what I like about what we're discussing is, 5 of my 7 trades were probably going to be calls. It is much easier to go long with the S&P at 5,700 than it is at 6,050. Much easier.
Okay. Yes, it is. Better prices.
All right. So, Licia, we've looked at SPX on your charts. I wanted to talk because really this is all about the bond market, and that's what's been really causing problems. If you want to see when the market is going to recover, track TLT or IEF, and that'll tell you everything you need to know. What do you think of this bond market here?
It had held my support there at 89.60 so many times, but now we're just below there, and this is the last time was back here. What is that? May? Last May. Looks like we're trying to hold this spot. Looks like we're trying to hold it. Little tiny rally going this morning. Yeah, I just find it so fascinating that the bonds move differently than what the Fed is trying to do. I don't know. I think it's kind of cool. I don't know why.
I'll tell you, yesterday we were on the precipice. If this PCE number came in bad, and bonds had turned around and sold off this morning, we could have been in for a bloodbath.
Yeah, I don't have support till down to 82.73 on TLT. So yes, that's quite a move. It would
the
be
last
quite
time
a
we
move
really made a clean break like this lower was in October of 2023. And that was the last time markets really felt ugly. So again, that's another piece I'm watching for this zero decay is we're watching, okay, VIX coming off. We've got this big options expiration. We should see volume coming in, VIX coming in. I want to see bonds recover, stock market floor. And then I'm going to be looking to do 7 trades, probably 5 long, 2 short. So 5 calls, 2 puts, might be 4 and 3. Never know. And I am planning on doing them at this point, if not Monday, maybe on the 27th, or maybe even as late as the week of New Year's instead of the week of Christmas, because sometimes this type of volatility happens and it delays, but it's not too late to join. And this is a really fun opportunity. You can click the link in that you're seeing below me, or the link if you're watching us on YouTube. You can click the link above me here to join us.
It's all in the timing. You will find your window.
Yes, the window will be there. It's not about if, it's about when.
Yes,
all right.
exactly.
And speaking, and again, this is a real great, this is an absolutely awesome opportunity for 7 free trades. We've made the price really nice. We've made the ability to join us so simple and easy. It's a no-brainer. Speaking of joining us, let's bring in the vicar of the VIX, the Viking of volatility, the man who
Good morning, Andrew.
Good morning,
Santa Giovinazzi, Andrew T. Good, Andrew T. Giovinazzi. Good morning, Andrew. Happy Friday.
Good morning, happy Friday, everybody. But how'd the gnocchi come out?
It came out awesome.
I didn't get any pictures.
Well, it was probably the best I've ever made it.
Oh wow,
it was really nice. So
that should have made people happy.
It's not hard. People don't realize. So yesterday I had a company Zoom. We are gonna do a lot. We've got people kind of all over the country. So, and I'm not gonna make people fly somewhere like the week before Christmas away from their families for a holiday party. That's a giant pain. So we're gonna get together in like February. But to do like a little holiday thing, I do a cooking demonstration for the option team. We have a glass of wine, hang out. And so yesterday I did a gnocchi with like a sauce, kind of a sausage tomato cream sauce, and it came out nicely.
Look good.
Look delicious.
Super easy, super rustic. And
Licia just imagined how it tasted. I think.
Licia just said, I think Scott should make this for me.
But he's not here.
I was thinking that, definitely.
So, but it was a really nice time, and we've got several new faces here, so it was a good opportunity to get to chat with everybody and hang out in a non-work environment. And anywho, before we get off the rails too much, Andrew, that PCE number just came out. Nice recovery on the futures. And nice drop in VIX markets. I continue to think bonds hold the key. What's your take on kind of what's happened over the last 3 days?
Well, I have a chart here.
Okay.
Just if Liz wants to show my thank you, he's on it. So this is the January VIX future.
Yeah.
And as you can see, yesterday, even with VIX cash down, this future was up a couple of bucks. And it was bid into the close. It is somewhat off right now. So we're getting a little, it's kind of been like a little sitting here negative. But so even with VIX down, so one thing for people to understand is, VIX cash, one thing, volatility, S&P 500, 30 days forward. But the futures they beat to a slightly different drummer than just the VIX cash. So if you want to see how the options are going to trade, you should follow the VIX futures and really kind of see what that performance is. But that's, I guess, for another show. But right now, wow, okay, so that future was bid. We closed in zone 4. So the market was basically saying, hey, here we are. We're about ready do we step into the next level of volatility with this Fed sell-off, or do we wait? And as of right now, and again, this is kind of for our special situation, our Santa rally setup. It wasn't, let's just say the market was right there, couldn't quite decide to take the plunge all the way, I would say. So This morning it looked a little ugly, and that inflation number came in okay, which was good because I think we've had probably 3, 4, 5 months of relatively hot inflation numbers,
Yeah.
and the market just didn't care, right?
Yeah.
So like, and this was, we had the election went, okay, well, depending on who you voted for, but we didn't have the madness that volatility predicted.
Well, there was
right?
a decision. That's what
There
people
was
wanted.
a decision, right? So, and that
Yes.
vol came in, market rallied because I think there was a lot of, everybody was kind of holding on, and then there was like the relief rally.
Yeah.
Now we have the reality of governing is now here, where, and I think this, like, do you guys remember the fiscal cliff I don't know, like a decade ago, Obama was fighting with, I don't know what that guy was, the Boehner, right?
Boehner. Oh, yeah.
Right. So that, and now if you don't recall, but that drove stocks down substantially. Worrying about that thing. Okay. And which, again, if we're so worried about the government, how big they spend, it's too big. But, and then right now we had, they try to pass some stupid spending bill again. We just had an election looking for less spending, and they do the same crap again. And, so I think that part that also played into this to some degree. Now they're trying to pass another spending bill, and maybe we shut the government down. So
that would be another reason. I think that was maybe in 2018 what we had the last time we had kind of a government fight was, when was some volatility right around this. They might shut the government down. I don't know that long term really matters.
Now, but historically, when they do that, that is a great vol selling opportunity.
Yeah.
Because everybody knows those knuckleheads will eventually like reopen the government. They could certainly pay the military, Social Security, Medicare, right? But everybody else, who cares? Like
non-essential services, and it's like not essential services.
Let's not pay congressmen.
Yeah.
Okay, because they can't do their basic job. But anyway, all of this
the whole country would be thrilled.
Yes. They can't. They got one job. They can't do it. Anyway, so, but you did see that kick in the VIX future yesterday on a day where the market kind of had that inside day. So, that bid for volatility in January, it definitely was higher. So again, so the vol futures are not exactly VIX. That's the short answer. So there's a different dynamic there, but it was bid yesterday. Don't forget, also volatility stays bid and you guys, as market makers know, it wasn't really the move down that got you as a market maker when you short a bunch of juice. It was the snap back when you were short gamma, right? Everybody short gamma and it just ripped your face off. So that's why vol stays higher when there's the rip. One thing we had a huge down day Wednesday, no question vol explodes, right? But it's also the fact that we could recover a huge part of that quickly keeps vol higher. And I think that's kind of where we find ourselves today, where I don't think it's it's not exactly a layup. We don't get back to 6,000 relatively fast. Certainly could happen if everybody gets excited again. Maybe there's better government news. Who knows, right? But it is a very strong market, and it has been up to this point this year. And I don't see anything too surprising with the Fed. However, I think this Fed announcement about not cutting so much is also, without basically Powell saying you guys have to stop spending money, which I still can't believe after 4 years he hasn't said that. I don't get that. How are you the Fed chairman and say, oh, you guys just spend whatever you want? It doesn't matter. It's beyond insane to me, but I guess Licia and I agree on that one.
All right.
And that's what we have. So from a vol point of view, like the vol is bid, I think, for a reason, because there's still some possibility of us to get back up there. But from an opportunity point of view for us, for like the special situations, I think a lot of those individual vols in name stocks didn't get near as bid as I thought they should. They're
No,
still
no.
relatively inexpensive.
Yeah, the stocks that you saw, like the names like Tesla and Microsoft, where vol really did bottom, where they got torched. The vol increased pretty dramatically, but a lot of the names didn't because they didn't really move that much.
Yep.
So, here's kind of my next question then. All right. So, and you've heard me talk about it. We've seen Licia look at the charts. We've heard Andrew's discussion on the Federal Reserve, government spending, and how it relates to market maker gamma positioning. But what do you think with the, I'm going to lay out with kind of the three scenarios that I see. What do you guys think this VIX explosion, how do you think it affects things next week and the following week? I'd love your opinion first, Licia.
Well, as I said, I see the market wanting to close that gap. So I think VIX could be a little sticky until we do that. And then we get that, this is enough. People have had enough. I'm going in, I'm buying, and we need the up window dressing at the end of the year. Mm-hmm. So once we close that gap, I think we rally. So I think VIX will be sticky until that rally begins.
Okay. Andrew, yeah. What are you thinking happens next week?
Yeah, I think I agree. I think you could get a slight relax in it, but at this point I don't see it coming down like early. And I think that we want to hear some government news. I think that would be a vol selling opportunity. But at least for right now, it is a long cycle. VIX expires after the inauguration. So again, from a timing point of view, sometimes these things matter when VIX expires, when it doesn't. So people might be looking at that as like there's a 24 VIX now, the inauguration is the 20th, we expire the 22nd. That should start a long decline in volatility, but I still think we have a couple of days here, at least until this backwardation goes away. When you look at VIX, if I just look at the VIX term structure, like this is pretty severe. We had a severe move, and you want to see this relax somewhat. When I say relax, you want that cash level coming down to the future a little bit. This is still pretty big gap. That gap is generally uncertainty. And the market is still looking for basically, I know it looks weird. It looks for lower vol in the long term, but higher, more, basically larger swings in the short term, like 1 week time frame. And that grew yesterday. And we'll see if it continues today. So that would be like if it relaxes seriously into the weekend, I think our vol event will be somewhat over. But that's what I would like to see. I like to see that VIX number in the future kind of get very close again.
Yeah. I think this PCE number coming out, and then quadruple witching, the big expiration this morning. That is going to free up a lot of market pressure. So I'm very interested to see how markets react coming out of that. Post PCE, we get a deal over the weekend or even today while markets are open with the expiration rolled off and this lower PCE number. I think markets calm down pretty quickly. If we don't get a deal, or if we come out of this morning and markets just start rolling over again and we start closing Licia's gap, VIX could be heading to 30. Now we could be there, maybe not today, maybe we head there Monday, but then we would get this delay in our zero decay out to probably the week of New Year's instead of the week of Christmas. And then there's still the scenario where they come in and just absolutely crush this stuff today on a deal. I don't know. Yeah. I mean, I wouldn't put past this market. The The only reason why I think we might not close that gap is because everybody wants to close that gap. and
That could be true. You're right about that. Everyone's looking at it. You're right.
It's like, oh, they're thinking we're going to close the gap. Let's buy it.
Yes. They're all just waiting to hit that buy button.
Hold on.
Right.
I gotta put maybe we should get Licia's chart up there so everybody can see the proper gap. But
yeah. So and like I said, I'm looking at. So I what was the low tick today? Overnight on futures, it was.
We're in the mid 570s SPY. That's the only thing I saw.
The low tick for S&P futures was 58.66. So that's another $36 lower than here. And we're currently down. Sorry, we're currently down 34. So that was $70 lower. $70 lower from where we are. We closed. I'm doing some math here, folks. We closed 58.67 yesterday, and that closing that little mini gap that we talked about would be 58.11. So we would have closed that the pre-market, and then Licia's gap is 57. The level Licia's looking at is 57.83. 57.83. We would have gotten right there early this morning, actually, pre-market. Yeah. We would have gotten right there, pretty close to their pre-market, Licia. Now that I'm looking at it.
There you go. That could satisfy.
That could satisfy the itch.
Not quite. The futures got real close, not the cash market. People, I know Licia knows this, but a lot of people don't realize futures trade 23 and a half hours a day. And so you can get overnight action that will close some things that maybe the cash market doesn't close.
Well, as you see, we don't have it in the ES.
Yeah.
You don't have that gap.
Right. ES basically doesn't gap except for on weekends. It'll gap on a Monday. But other than that, because where they're open almost all the time during the trading week, they're just closed on weekends. And you watch, they're going to try and get those open on the weekends to ruin everybody's weekend.
Oh, for sure. They just can't handle it. They just have to make money every minute of the day, every day.
Yeah, they do.
ES is sitting on support here, right around here. So you may be right, Mark.
There's a scenario where, we come out of today and things rally. There's a scenario where things get significantly worse and the VIX gets into the 30s, and then we don't calm down for several weeks. And then there's kind of a scenario in between where, we start to calm down today, really calm down on Monday. And now I'm looking at doing my zero decay trade, maybe the 27th or the 28th instead of Monday or Tuesday. Again, it's not a matter of if, it's a matter of when. All right. Well, we're kind of running up against it. It's already 9:13. Licia, do you have what are your market predictions for the day?
With the way we recovered here after the number, initially when I woke up and saw the market, when I saw it was down like 64, I'm like, okay, we're going to get a flush here today. The way we're recovering here a little bit, I'm thinking we don't get that flush. I'm thinking it's kind of quiet, quite honestly. I'm changing my mind here.
Okay.
We're allowed to do that.
Yeah, no, if you don't change your mind, if traders that don't change their mind don't stay in business.
It's true.
You're right.
100%. All right, Andrew, what are you thinking for today?
I mean, it's whether simple answer is I think we have another inside day today because we're waiting for this stupid federal spending bill and government shutdown. I know over long term, it doesn't make a difference. Short term to algos and crap like that, it does, ripping the market around. It wouldn't surprise me if we kind of had, up on euphoria, then it doesn't happen, that back down again. So I think we have an inside day, but with that and VIX VIX cash slightly lower, future slightly lower by the end of the day. But I don't feel like we're having like the grand SPX recovery today. So I'm just in kind of an inside day till this deal's done.
I think I'm leaning toward you. I think if we are going to get I would not be surprised if we got a full. So right now, S&P futures are down 31 points. NASDAQ futures are down 160 points. VIX futures are down. VIX futures are down 15 cents. So you've got NASDAQ futures down, S&P futures down, VIX futures down. That is a bottoming market.
Yeah.
I am going to be looking to position myself long today. I don't know if we're going to rip, but I think we're going to be higher than I think the lows were in pre-market. And I think that if you bought futures at, if you bought S&P futures for 58.70, you're going to be a happy person. I mean, you already are. You're up 30 handles. But
well, we do have a product for that if you want to get long this, if you want to jump into the holiday.
Yes. So folks, the fact that we're all set up, I want you to guys take this opportunity, especially with this market sell-off. It makes these zero decay trades, I think, even better. Click the link in chat. Join us. Join me. Andrew and I I'm going to be live again today with a little update, and then we're going to have our first session on Monday. But there's still time to join. Click the link or call my team 888-872-3301. We'd love to have you join us. All right, everybody. Like I said, we're up against it. You've heard our market thoughts. So for Andrew T. Giovinazzi, the Viking of Volatility, and Licia J. Leslie, Queen of the Candles, I'm Mark Sebastian. I am your only option. Programming note, we will not be live next Friday. We'll have some awesome content for you, but we will not be live. But we will be back on January 3rd. We hope you have a wonderful, wonderful, wonderful holiday season. Great Christmas and a great Hanukkah.
Merry
Talk
Christmas,
to you guys,
everybody. Bye-bye.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.